Welcome to another episode of Building Your First Home. Today we have finance expert Tony Van De Kerkhof on the show. In his role as the director of both the Finance Family and Victor Delta Kilo, as well as being a published author of a self-development book that covers all the key things they don't teach you in school, Tony has dedicated his career to transforming how Australians approach lending, property investment and financial growth. His journey is as diverse as it is inspiring. Having lived in China, he learnt Mandarin and founded multiple businesses before the age of 35. In this episode, we'll be discussing Tony's insights into the property market and the aspects of lending in today's economic climate, with a focus on understanding how deposit and lender's mortgage insurance can influence a purchase and what this means for a purchaser. Welcome to the show, Tony.
Thanks, Justin. Very kind intro. Cheers, mate.
Oh, there you go. Talk you up a little bit.
It's not hard to do, Tony.
Oh, you stop it. You stop it.
All right, Tony. So before we get into things, I wanted to ask you if you could give the listeners a brief overview of what a finance broker actually does and why a finance broker's role in building a new home is so critical.
Finance brokers are just the natural extension of the next step of a banker. So in our parents' day, it was the bank manager. That was the be-all and end-all. They're the ones that made or break dreams. Nowadays, banks' policies are quite niched out. So you need to have that diverse framework, diverse options that you can go to. And every banker worth their salt, eventually, if they put the client first, ends up becoming a broker.
Yeah, well, it makes sense.
Yeah, that's it. You essentially have all the same powers as the banker. You still, like, bankers still have to go to higher credit. They still need to key all your data in. But the way I love to explain it, imagine you walk into, say, a car dealership and that they sell one type of car. Now, they're not going to tell you that the dealership 2 doors down has better pricing, better servicing, more reliable cars. They're going to tell you the best they have.
That's true.
And then I guess as a purchaser, I can come to you, I can do one meeting, I can tell you all my financials, what it is I want to achieve, and then you're going to go and do that research for me and come back to me with the best options to suit my financial position.
Absolutely. Absolutely. So we collect all that data. It's lender agnostic. So it's the stuff that every bank's going to need no matter where we go. So there's no real double up. Once we get all that stuff, we deliver a couple of recommendations. The power is with the client to say no or to say yes, but we put all the information on the table. They take their pick and we run with it, get it approved.
But Tony, what if those first home builders' parents have banked with NAB for 25 years? Wouldn't they go to them?
Well, that's a good question. And you know what's really funny? That might not be the best financial decision, but for those clients, if that is what gets their parents on board and gets their parents' support, there's a factor we need to consider.
Well, that's true.
It's not a financial factor, but it is a factor.
Would that purchaser have any benefit by going directly to NAB versus coming to yourself in that situation?
No. We'll get them the exact same price, the exact same deal than if they went straight to NAB. But if there was some policy hurdle that this person wasn't aware of, bankers have application targets. So sometimes, even though they know that putting this in is going to get it declined, they've got application targets to submit. So they'll go, well, this one's not going to make it, but I need to hit my target for this metric. So I'm going to lodge it and get that declined, which, no, like that's not ideal for anybody.
Not at all, no.
And if it is declined, where are they going to go? They have to then get all their information back and go somewhere else.
Would that affect their ability, or when they apply for that next loan, will the lender look at that decline? Could that impact on their loan or ability to get a loan?
Great spot to do a bit of myth busting. So it's not actually the decline that affects your credit file. It's the multiple repeated applications.
Yeah.
Right.
So there was a client who was actually a neighbor to my doctor. My doctor had built his house, moved on, great. In Clyde, this is going back now, Clyde built a home and everyone was telling him, oh, you shouldn't build there. And I think he spent about 700. That property is worth well 7 digits now.
Yeah.
So, just another example of the stuff you see when you've been doing lending this long. But his neighbor hadn't built in 2 years. And so he was out grabbing the mail and his neighbor was there looking at the block and he said, when are you going to build? Like, this is actually affecting my property because your grass gets too long, et cetera. And he goes, oh, I've tried finance at 3 places and they've all said no. And he said, that's enough. Talk to my broker, Tony.
Yeah.
So I had a chat to him on the weekend, answered his call Saturday, sent the request for information, did the research Sunday because he's like, if I can't get this, I'm going to, I want to sell. And I said, mate, I'll know by Sunday if you get me all your documents whether or not it can be done. And the funny thing was, out of the 4 different, let's say there was 4 banks, he approached the 3 that would decline him.
Right.
And so he didn't know.
No, how would you?
But after 3 declines, you'd think no one can approve me.
Yeah.
True.
And now he's on his 4th property.
Yeah.
So get around him.
Well, I guess in short, like going to a broker, they can look at your individual circumstances, and with their knowledge of like different lenders' criteria, they can put you towards a lender that is going to look at your individual circumstance and more likely get you approved, rather than, like you said, just how would you know which bank to go to? You'd probably naturally go to the bank you bank with. That's probably what most people think, but that's not going to give you any benefit than going with any other lender.
Look, it's funny because it often swings against you more than it goes for you. And the reason I say it's a bit like a partner or an ex-partner from high school or somebody you've known since high school that kind of knows all the dumb stuff you did when you were young.
Oh, that's true.
Yeah.
And they hold all that
true.
against you on the internal record, stuff that's not going to come up in your credit file.
Yeah.
So you might go, I've banked with them for years, but you're 18 and you overdrew your accounts and you didn't know how that worked. You thought you had a free overdraft because it just let you.
Yeah.
No, it actually really damages your internal bank scoring, which is different to your credit file. And so your credit file might be amazing, but the bank you bank with, who knows that you're a bit of a loose unit on the weekends and go to get cash out at pubs, like whatever, like little things like that.
Yeah.
And they can actually count against you.
Yeah, right. And I guess a lot of people probably have no idea that that's the case.
No, so many people think, I just overdraw my account because the bank lets me, so it must be a feature. It's not, and it really hurts you when you go for a loan. Like one applicant, house and land package, also in the Southeast, I'll never forget, went to the bank, can you get an explanation for the client for these 21 overdraws on the account in the last 3 months? And that person, hand on heart, swore that he had an overdraft.
Yeah.
He didn't.
Yeah. Well, the money was still working.
That's it.
It keeps coming.
But the funny thing is, he was a good saver. Like he put money away, and sometimes because he was so strict on his savings, he would save more than he probably should have, and he didn't account for unexpected bills.
Yeah.
right.
So it wasn't even like this person was bad with money necessarily.
But he wouldn't touch his savings.
Like he wouldn't touch his
So
savings.
he put it in savings and then overdraw his spending account.
Yeah, by $50,
And it
$30.
hurt him in the end.
It absolutely punished him. It took probably an extra week longer than it should have to get approved, just because we had to come up with a strong explanation for them to keep on their records. Even though it looks like common sense, they need to have it on file from us, from the client, so if they ever get audited, and that just creates delays.
I think that's the other very important thing about a broker is they can actually explain your circumstance or explain things like this, where when you go in directly to the bank, you're explaining it to them. They can just only see it for what it is. But a broker can give a bit more of an explanation and understanding of what it is and then find a solution.
That's right.
Yeah.
For sure. I guess there's no doubt, like I'm a big fan of the broker in the equation versus going to the bank. Even like from an education standpoint, the information a broker can give to a purchaser is so much better than what they're going to get out of somebody who works in the bank a lot of the time. So, and I guess on that, one big thing is understanding the difference between deposit and servicing in a loan. That's something I think a lot of clients don't necessarily understand. As a client, if I'm walking around with a $200,000 deposit, does that mean I can purchase $1 million property because I've got 20%?
Well, yeah, it's interesting because it's a frequent conversation we're having, which is basically there are 3 main criteria the bank look at. One is deposit, one is your income, and the other one is your credit score. For most people, the credit score doesn't really factor into it.
Yeah.
It's because they're usually good enough.
Yep.
But the 2, deposit and income, the bank is going to take the lower of the 2. So you could have a mad deposit, 20, 30, 40%. But if you don't have acceptable income, decline.
Well, you need to be able to repay
The loan.
the rest of the loan with your income.
That's right. And then on the flip side, you might have a mad income, but if you don't have those savings and you haven't demonstrated the ability to get your own savings together, not always. I mean, there are ways around it with guarantors, government programs and things like that. But if you're just on your own with no assistance, you still need a deposit, no matter how good your income is.
Yeah.
For sure.
Yeah.
For sure. And so let's say I'm out looking to buy a house. Do I need 20% deposit?
No.
That's a big misconception, I think. A lot of people, maybe from their parents or other people that are advising them, obviously, ideally, if you had 20%, that's great, but it's pretty unrealistic with, the cost of living and the cost of purchasing properties. So we do get that a lot. So what sort of deposit would you need generally to purchase a house and land package?
For the current government scheme, if you're a first home buyer, literally 5%.
Yeah, right.
Because with the first homeowners grant, any sort of extra money you need, because, your parents might be like, oh, well, what about curtain? What about this? Not everyone does full inclusive like you guys do. So they might think, well, still need savings on top of that. Well, not really with this government scheme, because you're borrowing right up to 95%. And then the first time owners grant just becomes just cream on the cake.
Yeah.
It's just extra.
Extra savings, essentially.
Absolutely.
Yeah.
And if you're not a first home buyer, you can get it done with just 10%.
Yeah, okay.
So even with just 10%, you can do it. So it is definitely a misnomer, like a bit of a misunderstanding.
Yeah.
And I think where family and friends can often hurt more than they can help is where they go, oh, we'll just save that bit more.
Oh, yeah, we get that a lot.
Mate, in 12 years of doing home lending, I can tell you that next to nobody has been able to save more deposit faster than the market has moved.
That's
Correct.
Right. Yeah.
Yes.
So I'll never forget there was I won't go into the nationality, an ethnic couple, and they were just allergic to the idea of mortgage insurance. They go, oh, it's just an unnecessary cost. Mm-hmm. They wanted to buy in Berwick. Now, the prices I'm about to mention will tell you that this was some time ago.
Yep.
But the houses they were looking at, 4 bedrooms in Berwick at the time, were about $480. Mm-hmm. They were just shy of 20%.
Right.
And so they decided, oh, we're just going to save a bit more. They saved the extra 30 grand. The price of the same house, I think it was sold and then came back on market, was $550.
Right. So then they didn't have 20%.
Then they still didn't have 20%. What they did have was a lesson learned. And they went, you know what, Tony, stuff it. We're willing to pay the mortgage insurance, because if we had, we would have been net probably had, the mortgage insurance was like 10K.
Yep. Mm-hmm.
So they would have been, 60 grand ahead.
10K is a lot of money, but when you look at it on the flip side, 60K ahead, 10,000 doesn't mean so much. Before we go on any further, can you explain LMI, or lender's mortgage insurance, for listeners?
Absolutely. It doesn't protect you at all. So people think that LMI is there for them. It's not. Because borrowers that don't have a large deposit are deemed a higher risk, the bank goes, you know what? We'll still give you the money, but you need to insure us against yourself.
Yeah, right.
So if you fall over, then the insurance company will cover us for whatever we're out of pocket on.
Yeah.
Yep.
Yeah.
But then it's giving access to money you couldn't get otherwise.
Absolutely. Like if you go to any other country in the world, the idea that in Australia you can get a 95% loan is bonkers.
Right.
And it just speaks to the strength of our economy, the strength of the housing market. For that ability to borrow 95%, it's insane. Like the trade-off is, oh, look, I'll give you a bit of money. Meanwhile, I can get in today rather than never getting in at all.
Yeah.
Correct.
So let's say you've got 20% deposit, then you're paying no lender's mortgage insurance, because the bank will deem that less of a risk.
That's correct at that point.
Yeah. So then anything less than 20%, there is lender's mortgage insurance payable on, as a sliding scale of how much deposit you're contributing.
Yeah.
But like you just said, in some cases, if there's $10,000, $15,000 of lender's mortgage insurance, but it means you can purchase that property, it doesn't seem like such a bad thing then.
It really isn't, because at the end of the day, you kind of draw a line in the sand. Like you've gone, well, now I'm on this escalator.
Yes, true.
So one analogy I use with first-time buyers or anyone who's reluctant when it comes to LMI, I just use this analogy, which is when you go to the airport, they got the travelator. Now, if you own a property, you've just jumped on the travelator and you're moving faster, standing still, than anyone who's sort of just waiting and
a good way of looking at it.
inching
Yes.
forward
Yeah.
by saving their deposit.
That's true.
Because
They're never going to catch the travelator.
no, they're not.
No.
They're not. So the rank and level of savings you would need to achieve to keep pace with the travelator, you're at a flat jog, and very few people have household incomes that are high enough to do that.
Or if you did, you'd probably have the 20% deposit. It wouldn't be a discussion.
Exactly. Exactly.
I think also what's important to cover here is the way LMI is paid too, because it's not an upfront cost the purchaser needs to pay out of pocket, is it?
It gets put on top of the loan.
So if your lender's mortgage insurance is $10,000, that goes on top of your $700,000 loan.
Absolutely. Yep.
So it's not a huge deal.
It's not dipping into your deposit.
No.
So
Well, that's
it's not
good.
like you have to cough up that extra cash.
I mean, and then you break that 10,000 down over a 30-year loan, and when you're looking at the per year cost versus what the per year growth is in that property, you're well ahead.
That's $10,000 well spent.
Very well spent.
Absolutely. And you get some people in the comment section going, oh, well, if you've added it onto loan, then you're paying interest on it over 30 years. Well, look, if you were so keen to save that extra money, once you're in the house, or if you're still renting or living with mum and dad while you're building, save that money and put it into the loan.
True.
So you can effectively pay
it
off
off.
the LMI
Yeah.
by the time you move in.
True.
And
But at
it's
least
done.
you got the loan approved and you bought the property.
Exactly. You're on the travelator.
Yeah.
Correct.
Make use of it.
Well, I guess the reality is in Australia, generally in most markets, the growth on your property is going to exceed what you're spending in interest on a loan.
Yeah. Yeah. I think what capital growth averages, depending on the area, like worst case 5%.
Yeah.
And anywhere from 7 to 8% depending on the market.
And so really what you're doing is you're using someone else's money to make yourself money.
Yeah, absolutely. And this is like people go, oh, well, I had a really interesting conversation with a couple the other night. Let's just call it female applicant was all about property. Male applicant is all about Vanguard ETFs. And that's great. Like you can put your, $100, $1,000, even $1 million into Vanguard ETFs.
Sorry, what are Vanguard ETFs?
Just like
But I'm
shares,
educated on this.
just shares,
shares,
like
shares.
managed funds, shares. It's basically just exposure to the share market rather than picking a stock.
Yes.
It's like a combination of all the shares.
yeah, right.
So
Yeah.
people see that if you want to get into share market, but you don't want to gamble, it's just a safe bet.
Low risk,
because
yeah.
And hey, this is not financial advice, but that's just what people who want to invest in shares go for, right?
Of course.
Yep.
Yeah.
And they go, oh, it's better returns and you get dividends. Yeah, but it's just your money. Whereas with a property, to your point, Jordan, you put in, say, 50 grand and you're not getting 7% growth on 50 grand, which is like a good year for the share market.
Yep.
You're getting 7% growth on, $750,000
The value of the property.
Correct. On the value of the property.
And you can't go to a bank and lend for share purchasing.
Yeah, that's right. Or you can, but it's notoriously difficult and very expensive.
At high interest, like it almost
Way
may
higher.
not be worth, like the profit you get back may not be worth the cost of the exercise.
Yeah, and if the share market goes down, it goes into what's called a margin call.
Right.
And the bank goes, well, the market value of your shares have gone down. We're going to sell your shares whether you like it or not. So
right.
it's very risky.
So you're into a forced loss, basically. At that
Absolutely,
point.
a forced loss. But we can do some quick maths if we've got someone's got a calculator out. But if you look at the quick maths on say you had 50 grand, right? Let's say you took $1 million. Let's say the property's gone up to $1 million on your $50,000 you initially put in. When you look at the growth on that, and then you said, well, I only put in 50,000, even if you took away the interest cost, it's just head and shoulders.
Yeah. Yeah.
Incomparable.
Yeah. And when we're talking about obviously first home builders entering the market, we always want to look at this property as, a stepping stone to get into the market. It's not going to be their forever home, but it's a way to generate essentially an additional income while they're living in this brand new property to set them up for the rest of their lives. So, like we talk about it, missing the boat or not getting on the travelator can really set someone back to a point where I've seen it in my career that people have come in to purchase a property for, let's say, $400,000 and then whatever reason went away to save the extra deposit. 12 months later have come back and it's gone up 150, 200,000. Sometimes those people have been actually priced out of the market and haven't been able to purchase something. And that was all of a decision on, maybe a friend or a family member gave them that advice that don't pay lender's mortgage insurance, save more deposit. And that really, can set someone back in life.
It really can.
Well, you cannot save at the same rate the property market grows.
No, exactly right. Yeah. I wanted to talk about the deposits of, let's say you're going to purchase a property and we're speaking about a 5% deposit to purchase this property. A common misconception that we get is, once the client's found the house and land package that they're happy with, they want to put down the 5% on the build, 5% on the land, which makes their 5%. They're reluctant to do that because they believe that they're spending their savings that they need to show the bank. Can you give us a little bit of an insight on that?
Yeah, sure. And you're right. Like it's something that I get to reassure people around. It's still your savings. Like you showed the bank that you saved it. The banks consider genuine savings, a deposit that's been held and paid and held for 3 months is genuine savings.
Yeah.
Paying rent is also at a lot of banks considered genuine savings.
Yeah. Right. Well, it's a consistent payment. It shows that you can obviously make this ongoing payment consistently. So
yeah, absolutely. And not to get too into or not to highlight or say, oh, I'm encouraging people to game the system. But essentially, if you were to come into a lump sum, let's say you had a hobby car, a toy car, and you got it with every intention to one day I'm going to do it up, I'm going to do this, I'm going to do that, but you never had the money, you never had the time, and you're saving incrementally. And like that's a great wish, but is it stopping you from creating actual wealth that would get you to a point where you could enjoy that car?
That's right.
So I see people holding on to something like that car, which they don't have time for and they don't have the funds for anyway. instead of maybe cashing out and selling that car. And we're talking like your old Skylines, your old Supers, Celikas, like things that people, it's a mad car. It's a bit of like a toy thing. I understand it's very emotional.
Yeah.
Could be a caravan, could be a boat. But if you get onto that property market, yes, you're sacrificing that now. Once you've got equity, we'll help you do a cash out to get a madder boat, car, or whatever.
Yeah.
So
there's just an order to do this in. Buy the property first, then buy the car, the boat, the other items.
And that's where I've had this conversation, I think, 5 times in the last week, where I've moved into stuff like self-development for my kids and just because it's something I'm really passionate about, but I bring it into my broker conversations where I talk about the psychology of sacrifice, which is the people that forego those temporary pleasures that they really don't even have time for in their 20s. Like they don't travel that much. They work really hard. They save really hard. They get into property. They maybe do what I call in the Victor Delta Kilo buying an investment property course, the leapfrog strategy, which is they get a house and land package. They move in. Once they move in, they buy something off the plan. It's 18 months away. And then they then move into that one when it's done and sell the old one. And so they're just constantly sort of rotating through properties. It's exhausting, every 2 years, 3 years moving. But by the age of 26, 28, they might have done 3 or 4 properties and had 150,000 tax-free dollars worth of growth on all of them, which has set them up now where they've got the maddest house, almost no debt, and they're able to travel, and all their friends are in debt up to their eyeballs.
Well, that buys a pretty good hobby car, doesn't it?
Exactly.
It certainly does.
I think also you say it's a bit of work, and it is a bit of work moving house, but when you really break that down, maybe it's 1 week of work for someone, and if you're making $150,000, do they make $150,000 a week at their job? No, they don't. So it's actually the easiest week of work they're going to do that year for the amount of money they're going to generate.
Well, why don't they just put aside a couple of thousand and pay some removalists and now it's no work?
Yeah, exactly. But, and that's the interesting thing with the psychology of sacrifice. There was a team of psychologists who did a study on development and the development of successful people, and they tested these children and they tracked them throughout their early life. Essentially, it comes down to delayed gratification. So the test they did was they said to the children, look, there's a bowl of marshmallows on the table. If you eat any of the marshmallows, that's all you get. If you don't eat any marshmallows, then, we will give you 2 bags, way more than what's on the table.
Yeah.
It was about split half on the kids that were like, I really want that marshmallow. I don't care. I can't see those 2 bags.
Yeah.
And so I'd rather just what's in front of me than what is potentially there.
Yeah.
Some kids were like, 2 bags sound mad.
Yeah.
The strategy they used, those children, to actually delay the gratification was just look at something else.
Yeah.
Yeah, right.
So the people that are constantly on car sales looking at those cars can't delay their gratification because that's all they're filling their vision with.
Yeah, true.
Whereas if they're looking at property going, I'm going to surround my vision with just property, they won't even think about the car. It's not even a point anymore. So
That's true.
it comes down to the actions and behaviors and the delayed gratification, which some people are just not conscious of when they're doing it.
That's true. That actually resonates with us a lot because I think a lot of first home buyers or builders, when they're wanting to enter the market, they've got this perception of what that looks like to them. And it looks very similar to what Kim Kardashian's doing on Instagram and what they're seeing on TikTok and what they're seeing all these like influencers and things achieve. So they want that instant gratification of like the top. But a lot of the time that's, quite unattainable. It's a lot of money. So for them to, bring back that expectation and look at something that is realistic to them, but like we spoke about, will eventually lead them to where they want to be in life.
Yeah.
But and then we say it's a sacrifice, but is it really if you're buying that 3-bedroom home rather than the 4-bedroom home, if it's just you and your partner, are you really sacrificing much? You're still moving into a nice home. And actually that leads me on to my next question. What like trends or differences are you now seeing when people are coming to, for you to get some finance to purchase a property? What are some changes you're now seeing in the market?
I'd say purchaser expectation is going through a bit of a reset because of the post-COVID price changes. It's just a fact of life. Like things just cost more.
That's
so
true. Yeah.
they've heard their friends get X for Y, and now they're like, I want one of those.
Yeah.
It's like, no, that was 12 months ago pricing.
We've seen that. Yeah. My friend bought this house for X 24 months ago. It's this size, the land's this size. I want the same thing. And when you tell them that that's, $200,000, $300,000, $400,000 more, they can't really get their heads around it. So then for what their friend spent on this particular home versus what they're spending, it just doesn't align. And that's a really hard thing for them to get their heads around because they're directly comparing it to what their friend did. But it's like we're speaking about, it's their friend got into the market 2 years earlier and they've seen that growth. So they can wait around and wait for the prices to drop, which is something, we always hear from clients, but it's just not going to happen.
Yeah, I think it's important because their next friend will be having the same conversation 2 years from now.
True.
If they don't acknowledge that now and they hold off, they'll still be in the same position 2 years later, looking at what their friend bought 4 years ago and not being able to afford that property.
Well, like we speak about, the cost of land is obviously increasing year after year. The cost of construction increases every few months. So to build your first home or to build any home, obviously the cost is going to be greater as time goes on.
It's literally the best time to plant a tree, which was 30 years ago.
Yeah.
But the second best time is today.
For sure.
And it's funny because the biggest critics that I think hold young first home buyers back the most are actually the older generation, whoever they are. Because they go, oh, but that land is tiny.
Yeah.
The
Oh,
bloody
I'd
postage
never,
stamp.
yeah, I'd never live on, that house, I'd never live there. What could you do with that? But honestly, the numbers don't lie. And the numbers show that there are way more people now than there were back in those older generations' days, first of all.
Yep.
Secondly, there are more people coming.
Yeah, that's true.
Again, this is all government data. And if you compare the migration numbers with the approved construction data, there is a massive gap between supply, which is low, and demand, which is high.
Yeah.
And that means that prices will go up.
At some point, that demand is going to need to be met. Yeah, correct.
Absolutely.
Yeah.
And that's why I think, on a side note, house and land is a pretty patriotic thing to do because you're adding to housing supply.
Yeah.
Correct.
And if what your parents are saying now, where they're like, or your uncles and aunties who are like, oh, that's so small. Yeah, but how small is it going to be in 15 years?
That's true.
And if anyone is listening to this and they've traveled, you'll know that overseas, like when I went to the UK, everyone's in townhouses.
Correct.
Like slim, tiny townhouses or apartments.
Yeah, 3 stories high or apartments.
And they're tiny. And that's where we're headed.
Yeah.
Right. So if you can get land now, guys, grab it because your kids or your grandkids may not get land at all.
That's true.
I think the other important thing on that is a lot of people think land size matters because they might develop this block of land. But the reality is when you purchase a house and land package, you're going to have a covenant on the land that for the next 20 to 30 years will restrict your ability to actually do any development on the land. So unless you're planning to hold this house for the next 40 years, which is very unlikely, then there's no benefit to buying that bigger block. And then even if you buy the bigger block, is it big enough for future development? And the answer is no. They don't cut blocks big enough now.
100%. And then that ties into the next point, which is people don't understand the significant deposit requirements for doing a development.
Correct.
They are substantial. And I've seen families broken because they decided to get a property that was pretty bad. And they could have gotten something nice and livable because the idea was, but we'll develop it.
Yeah.
Now, if they'd spoken to a broker or gotten any information on this from someone who understood their future goals, they would have been told that you understand that there is almost next to no chance you're going to have enough deposit or equity to do this development and keep it, right? Unless, like you said, you wait 30 or 40 years.
Yeah.
And I've seen it where families have gotten to that point where they've realized we're now left with a bit of a dud. They have no money to renovate or they don't have the budget to renovate and they're living in a place that's just not up to standards, not up to scratch. And they don't have the budget or the deposits to do what they want to do. They didn't get the advice from their broker.
Yeah.
Correct.
Yeah.
And all property appreciates in value. So you may as well buy something you're going to be comfortable and happy living in because you're going to get a return on that money regardless. There's no additional benefit to you suffering living in an old home on a very big block of land where you're just getting equal growth on that property.
Yeah, and look, the reason why your parents might be spruiking the block of land is because they didn't have smartphones. The only place for them to have fun was in the backyard, playing cricket, kicking a soccer ball. And if people who are first-time buyers honestly sit down with themselves and go, how often do I smack a cricket ball in the backyard or kick a soccer ball around? The answer is never.
Yeah.
You go home after work and you browse your phone or you want to watch a movie. So a small, discreet theatre room that you can fit into your block of land or into your build for very little to no extra cost
Yes.
is going to give you a million times more value than a backyard that you're never going to use.
Correct.
Melbourne weather is not conducive for 6 months of the year to have a fire pit and be outside anyway.
No.
So why do you want that maintenance in winter?
Exactly. And I think, the one time that you do want to go and play cricket on Christmas Day with your family, a lot of these master plan communities and big estates put in like hectares and hectares of parks and walking trails and things for that occasion with great facilities. They're looked after. You don't need to mow the lawn there. You don't need to do the weeding. They're looked after and they're perfect when you want to go and use it. So, if you buy that 300 square meter block or that 400 square meter block, that 100 square meters doesn't really make too much of a difference on your lifestyle.
No.
But it does to the overall cost, because when we're talking about $1,000 to $1,500 per square meter, that 100 square meters, although seems insignificant, could cost you $150,000. That's a pretty expensive backyard.
100%. And when you look at the way that, if you're looking at a double story, whatever it might be, how it sits on the block, you're going to have a bit more on each side and a little bit more at the back. Like when it's spread out and a bit on the front, which no one uses their front lawn for anything. No one uses their side lawns for anything except to maybe hang the washing.
Put the wheelie bins. They're sitting on 100 grand worth of land.
Grow weeds.
Yeah, absolutely. So I think it's perspective and people just sitting down going, hang on a second, am I going to really use this? Is this an unnecessary cost that's preventing me from getting on the travelator and moving along with the market and just getting all that capital growth?
Correct.
Am I my own worst enemy?
Yeah.
But I guess when you look at what a lot of these people's parents did buy back then, yes, they bought big blocks of land and then they built 12 square houses on that land. But if you, as a buyer today, you buy a big block of land and put a 12 square house on it, you've created a problem in itself, which is you've undercapitalized for that block of land. Good luck getting your money back on it, because how many people in the resale market want a small 3-bedroom house on 800 square meters of land?
It's not wanted anymore.
It's not wanted.
No. People want something where, you invite your friends in and there's a space for it. So people come over and they'll have dinner with you. And whether it's you're ordering Uber Eats or you're in your kitchen and that island bench is there and you can sort of serve food across the island bench, people want a space where you can invite your friends over to watch a movie and it's comfortable. But I would say 90% of the things that people do nowadays when they're inviting their friends over, it's indoors.
It's indoors, yeah.
Yeah.
Yeah, well, when we're talking about these properties, and they do still have outdoor areas enough to have a table setting, a barbecue, a little lawn area if you've got a pet. There is enough space to enjoy it if you do want to sit outside, but you don't need 20 meters of backyard to run around in. It's just not realistic.
I think it's nostalgia. I think people grew up with it.
True.
And so they're nostalgic about it in the same way that I'm nostalgic about a Game Boy. But when I've actually got one in my hands, I'm like, I want to play my PC.
True.
It's like, I'm going to go do this now because it's way better and it's more what I'm into now.
Yes.
Exactly right.
Yeah. So that nostalgia haze can cloud some decisions.
That's true. Yeah. And I guess when they're getting the advice from their parents or the older generation, they need to take advice from the people they look up to. But I guess that's what this podcast is about. It's educating, these people from experts, and we see it day in, day out, and we see these decisions made, and we just want to help people, guide them down the right path.
Absolutely. And it comes down to that willingness to sacrifice and willingness to listen, willingness to question and challenge your own beliefs. Like, it doesn't cost anything to put your beliefs on the table around property and go, well, what are these guys saying? The moment people start feeling defensive around their beliefs, it's a really good sign for people to start questioning, wait, why am I reacting this way?
Yeah.
Am I being defensive because I might be wrong? And people are fearful of being wrong, and so it leads to a defensive behavior.
That's true.
This is not the stuff your average broker talks about, but
No.
we're not your average broker. We're talking about, how people react to things and the psychology behind, as a buyer in the market, and the people that we see come to us for lending, they'll tell us they don't want to go ahead because of X. All right, that's what I'm hearing, but I can also hear that in reality, it's because of Y.
Yeah.
They're not being honest with themselves, and that's fine. I'm not there to tell them what to do with their lives, but I can tell that they're lying to themselves.
Yeah. Well, I guess a lot of people, it's a big purchase, so a lot of people are overall nervous to make that decision, or it seems like such a big risk, but it is quite a calculated risk when you're buying property, because when have we ever seen historically, if you bought a property 100 years ago, it is not worth less than what it cost then.
Yeah, it smashes inflation.
Yeah,
For sure.
Exactly.
It can be hard too, I guess, where you've got family or friends and they've got their opinion on it and they're telling you, no, don't buy that, buy the bigger block. If you make the wrong decision on that one they're going to turn around and say, well, we told you should have bought that property with the bigger block. So I think a lot of people get nervous about making the commitment because they're worried about what if. But really what people need to do is do what's right for them and what they're most comfortable with.
Absolutely. And despite, a 50 or 100 square meter difference in those blocks, say today, those differences, those same small differences of say 50 to 100, say 5 years ago, no one's nitpicking.
No.
Like if you bought 5 years ago, no one's nitpicking, I bought in say 2019 instead of 2018, I did better. Like over a 5-10 year period, it's irrelevant.
It is.
Correct.
It's just you're a homeowner.
Yeah.
You've been in the market. It's the one I love is it's not trying to time the market. It's time in the market.
Exactly.
So like if you've been in for 5 years, you're not nitpicking over a couple of square meters. You're not nitpicking over you paid 20K over. You feel it's irrelevant because your house is worth like 30% more.
Yeah.
Yes.
Yeah.
Correct. I think it's also a lot of people want the bigger block for the show of it in a way as well. Like they want to tell their friends their block is bigger than theirs.
Yeah.
Maybe. But the reality is if your block's 300 or your block's 400, no one's that impressed by your land size.
Yeah, exactly. It's like going, hey, Tomo, you're at Bunnings. You go, there's your land size. Yeah. How's that land size? Like no one cares.
Only 300.
Maybe you should go to the other hardware store, Mitre.
Exactly right.
But buy that 300, put a house on it that you love living in.
Oh,
that's
and that's what it comes down to. And that's where I think you guys crush is that I see a lot of first home buyers and they think there's only like 2 builders. And then they come and see Turnkey and they're like, oh my God, like the range of floor plans, the ability to just make small changes within reason to actually get the house they want.
Yeah. Correct.
And that's what people talk about. Not the land size, but a much better design that uses the land better.
That's right.
That's what makes people blow their minds. Because if all us are being honest and listeners are being honest with themselves, you like to have a bit of flex. You like people to come over and
100%.
go, wow.
Correct.
And that's okay.
Yeah.
Nothing wrong with wanting that when people come to your house to go, wow.
Exactly.
People don't walk in and go, what's the square meter of this land?
Yeah,
that's
it.
impressive. They walk in and they love your kitchen. They love your ensuite. They love your outdoor area. That's what's
The
impressive.
floor, they walk in and they go, it feels so open.
Yeah, that's
Those ceilings are so high. They look for these, even the doors are super high. Like little things that you guys know that the average Joe doesn't. And you're like, hey, we're going to do this. It's not going to add any cost, but it's going to like blow people away with the feel.
Yeah,
that's
and
right.
that's, again, when we're talking about value and is it a smart decision, that's what kicks off in the resale value when the bank's valuing it. They come through and value as a humans too.
Yeah.
Yes.
And they will use they will use logic to justify their emotion. So when a valuer walks through, or an agent walks through, or a potential buyer walks through, and they feel like, wow, because of the height of the ceilings, the doors, the finishings, all these inclusions you guys can wrap in, they will find a way to justify that higher value because they feel good about it.
Yeah, for sure.
Whereas if the land is big, but it's just everything is sort of average.
Yeah.
I don't want to say it's an ick feeling, but they'll be like, it's average.
It's average.
And they'll give you an average valuation.
You've underutilized that land that you've spent a lot of money on.
Well, I've
basically.
seen firsthand properties on smaller pieces of land sell for a higher price, when they're spec'd correctly and they've got these nice elements we're talking about, rather than your average home on a bigger block of land. Like the land and the bigger block and the other house should sell for more, but it doesn't always because people buy on emotion when they're buying a house.
Yep.
And what that person needs to sell for to justify what they've spent, it doesn't work because when I'm looking at it, I'm going, I don't love this house. I don't want to spend that much on it.
That's right. Yeah.
Even though on paper, that's a good land size. But if it's underutilized or utilized poorly, it's really not going to help you at all.
You actually look out the back and you go, that's a pretty average backyard. That's what your perception is as a buyer.
Yeah.
Yeah.
Exactly.
Yeah.
And it would be a bit weird if you pull your plan of subdivision out when your friends come over.
It's already on the fridge.
No, they just turned it into their placemats.
Exactly. One other thing I wanted to touch on today too is it's been an interesting market for the last 12 to 18 months where we've been seeing interest rates go up. And that's not something we've seen in quite a while in the marketplace. As a broker, what are your feelings about where we might see interest rates go over the next 12 to 18 months?
It's very exciting. I actually spoke to the AFR about this, about the direction of rates. Now, the banks pay people internal to them, not their economists, funnily enough. Like this is a totally separate department to set their fixed rates. Now, they typically set their fixed rates in the direction the wind is blowing. So when rates were going up, fixed rates were higher than the variable. And if, when we were at 2%, they went to 3%, fixed rates were at 4%. And people went, oh, I better fix at 4% because it might go higher. And it did.
Yeah.
Yep.
But for a while there, the fixed rates were at like 7%. The variable rates never went there.
Yeah.
And so the bank boffins went, don't think rates are going to go up. So they've been coming down slowly to where they're on par.
Yeah.
Now, as of the last sort of week or two, we've seen fixed rates go below 6%,
Yeah.
which is 0.25%, in some cases 0.5% lower than what the variable rates are. So the way the fixed rates are positioned gives you an indication of which way the rates are going.
Yeah, okay.
And typically they're call it an average 6 to 9 month indicator. So let's say that there is a 1 year fixed rate at 5.99 today, but variable you could get 6.29. So what the bank is saying, they'll think in the next 12 months, there'll be probably 3 rate drops. That's 0.75.
Yeah.
Because they want the fixed rate to still be higher than the variable
of course.
in 12 months' time.
Yeah.
So I would think that based on a 1 year fixed being, say, 5.99, they're kind of baking in 2 or 3 rate cuts in the next 12 months.
Yep.
That's what it shows me.
Which would be very good news for the market.
As soon as that happens and people get confidence that the worst is over, game on.
What do you think that's going to do to the market?
Well, game on. Like at the moment, there's, people are still there's a bit of a hangover around builders going bust. But the pain is already past. Like if a builder exists today, they've gone through the worst of it. They've come out the other end.
For sure.
That's like, after an earthquake, not buying a house because some fell over. No, the ones that were going to fall over fell over.
That's right.
Correct.
And the ones that are stable are stable. Like
Agreed.
they're left, right?
Very true.
So once people realize that that's no longer an issue, once people realize that, suppliers come back into the market, builders are getting more, there's more competition now, prices are being competitive. And once people realize that rates are coming down, which then increases borrowing capacity, the market will just take off.
Well, I guess that plus we spoke about earlier, the population increasing.
Yeah.
We've seen it before when this does happen. Right now there's a lot of land stock and a lot of availability. So buyers actually have a lot of choice. There's a lot of great rebates and things on offer.
Which is
very, very quickly that dries up and it becomes if you want a block of land, you probably wait in your car at the car park for the land sales office to open because you're going to miss out. And I think like for a first home builder, it's important to have that choice. So now is a great time to be looking because there's really good offers out there.
Oh, 100%. And this is, so like you guys, I've been doing this now for over a decade in my field of broking. And so being that I've based in the southeast of Melbourne, it's a growth corridor. A lot of what I've done over the last 12 years has been house and land.
Yeah.
And I still remember a first home buyer and his friends were going, oh, why would you buy an officer? Blah, blah, blah. And it was like,
Middle of nowhere.
yeah. I think the package was $350.
Yeah, right.
The package.
Yeah.
Now that's land, if you're lucky.
Yeah.
So this is a whole package, house and land for $350. And people are going to be like, oh, that's ridiculous. No, but you have to understand, I was there.
We sold
Yes.
them.
Yeah. These guys sold it. I did the funding.
Yeah.
And I'll never forget his mum at the appointment, best mum ever, Mrs. Brown, if you're out there. But she goes, he's like, oh, can you explain the contracts to me? And his mum looks at him and goes, you either want the loan or you don't. Whether you understand it or not, you have to pay this much. Just sign the contract, son. Correct. And get this property because you'll never regret it.
That's
and
right.
I can tell you now, I did a quick cheeky check.
Yeah.
And his property's worth 2.5 times
Yeah.
what he paid for it.
That's
So,
very good return for it.
Yeah.
Yeah. And, ha to all his mates who waited 5 years.
Yeah.
Correct.
Didn't want to go out to officer or
Yeah.
tried to look for maybe another suburb that was a bit closer in that had a much higher cost. Maybe they couldn't buy something.
Correct. I think that's the biggest mistake we see is people wanting to buy in the area maybe they grew up in, but realistically, they can't afford the area they grew up in.
Not the first property.
Not the first
But
property.
if you do the leapfrog, like we were
that's
talking
right.
about
Sure.
earlier,
Yeah,
you'll
yeah.
be there.
Get to
for
where
sure.
you'll get to where you want to get to if
Yep.
you use property as that tool.
But you need to take those steps and do that work
Yep.
to get to, like for anything, you have to do the work to get to where you want to be. It's not just going to happen straight away.
100%.
For you. Yeah.
Absolutely.
All right. Well, Tony, for the listeners, if you could give them one piece of property advice that you would have told your younger self, what would that be?
I'd say just do it.
Yeah.
Honestly, like no amount of holidays, video games, hobby toys, whatever. In hindsight, yeah, I definitely sacrificed. So I never did holidays and all that stuff.
Yep.
But I would say just do it. Just
Yeah,
do
for
it. Because the people I see that, have Instagrams that are off their tap, in their 20s are the ones that come into me with barely any savings in their 30s and they feel like they're left behind.
True.
So to avoid that feeling, because you can always travel later.
I was going to say, you can travel when you're 30.
And you can travel in
a
your
lot better
20s.
too.
Yes, I was going to say, you can travel in your 20s poor,
Yeah.
or you can travel in your 30s, 40s, like not poor.
Yeah.
Like
Yeah.
just enjoying things better.
100%.
Not worrying about budgets so much.
Yeah.
Maybe even if you're going to Europe rather than sitting, in economy, like with sore back, it takes 3 days to get better. You'll be like, I'll just go big and go for a business flight. And listening to this as a first home buyer, you might think that sounds unrealistic, but I've been where you are and I am where I am now. And I can tell you that it's an inevitability. It's eventual. It's just, you can't see it now, but you need to have that faith.
Yeah.
And I think people think that it's logic-based decision. But like I mentioned with valuations before, people will use logic to justify their emotions.
True.
And as long as you know what you're up for, my advice is suck it up, reflect on what is really holding you back, not the reasons or excuses you are generating for yourself, and just do it. Get something.
Yep.
Something is better than nothing.
Yeah.
Exactly right.
Reach out, have a chat to a broker, find out what you can borrow because you might be surprised. There's a lot of products out there. There's a lot of ways that, a great broker can help you enter the market. And I think that's a very good place for people to start is, reach out, have a finance check, see where you're at. You might be surprised.
I agree. I think stop listening to the people around you who are trying to tell you how they think it should be done. Go to an expert and have that first conversation and work out what can actually be done. And you might find you're in a better position than you thought where you can start taking action now and get yourself on that the
Travelator.
Yeah. Well, it's like the property journey, right? Let's talk about as if, maybe you play soccer on the weekend. If you want to start playing soccer and you have a friend who's played the game twice and that person's telling you whether or not they think that you do well in soccer, that person's only played the game twice.
That's true.
Now, a broker or you guys have done this. We've had hundreds of games.
Oh, yeah.
And we can look at a person and go, well, we know not like, one particular bank or one particular builder. It's like, no, you've got multiple options. We can go, well, you've said you want to play soccer. We can get you into that sport. Because the reality is,
coach. Yeah, put them in.
Put them in. We can get them in, right? Because we've got the experience through hundreds of transactions, thousands of transactions to know where this person's going to fit and get you into the sport, right? So whatever it is, like don't listen to that person who's played twice because that's most people in their lives might go through this transaction 2, maybe 3 times.
Yeah. Yeah.
So why are we listening to them?
You know what I think, like, Tony, you personally as a broker, obviously we work closely together, but you do give your buyers that confidence. Obviously with your knowledge, you can look at their scenario and you can give them that surefire confidence that like you can do it.
Yes.
Like one of your clients, one of our clients now, 21 years old, great guy, but he's sacrificed and he's going to be entering the property market. I don't know many other 21-year-olds that are doing that these days.
Yeah, and people go, oh, but how can he afford it?
Yeah.
Well, I'll put it to you this way. If you can, rent vest or even look at what is brand spanking new, hot off the press, the build now, pay later option, and you are getting a 3-bedroom. Now, let's say, for example, you were to rent out a bedroom to a mate, just cash on the side, whatever. Still your owner-occupied home. You're not looking for tax savings, but $150, $200 a week. I think it's going rates like $200 for a room now.
Yeah.
That sounds about right. Yeah.
So $200 for, your mate to be in the property. It's probably safer because there's more people at home at any given time. It's
a bit of fun.
Property's less unoccupied. I'm sure there'll be a few laughs after work type thing. It's
Exactly
less lonely, yeah. But now you're it's your property, but that person's chipping in $200 a week, which is $800 a month, say, rounding down, which adds up. And when you add it into helping with your mortgage repayments, a lot of thing that people lose perspective of, it might be tough now, but with rates being the highest they've ever been, fixed rates indicating that they're going to go down, it's only going to get easier.
Yeah.
Correct.
It's only going to get easier. And that's the thing, like a mortgage now of $550, $600, if that makes you panic, in 10 years' time, the average mortgage is probably going to be $1 million.
Yes. Exactly right.
Because for our parents, I remember my parents bought a house, Newcastle, where we grew up for like $34,000, whatever it was.
Yeah.
And their interest rate was 18% and they had a loan of like 25 grand and it was unbelievable.
Yeah.
But their incomes were super low because back then incomes were super low compared to where they are now.
Yeah.
Adjusted for inflation, probably the same. But at that time. So your pay is going to go up with increases.
Correct.
The property value is going to go up. The rates from here will probably go down somewhat. But guess what? Your debt isn't indexed.
Yeah.
No.
Unlike a HELP debt or a HEX debt student loan where they increase the amount owing based on inflation, your current debt doesn't change.
No.
Yeah.
So $300,000 loan, a $600,000 loan, whatever it is, that's not going up if you don't touch it. It's only going down.
Yeah.
Yes.
Correct.
While your income's going up.
Yeah.
While
Correct.
everything else is just moving forward.
Yeah.
Exactly. Exactly right.
Great insights.
Yeah.
Well, thank you, Tony, for coming in today. It's been very insightful. We've enjoyed having you here, and I think we'll definitely get you back because there's a lot more to cover.
Yeah, look, really, really glad I could be on, guys. I really do have a passion for education. It's not a spruik to, come to me for your broking. It's
Not at
about
all, no.
It's about definitely talk to your broker. We respect relationships. You know, we're not here to cut anyone's lunch, but if you feel like the person you're talking to is reluctant or aggressive, have a think, get a second opinion, yeah?
Get the second opinion anyway. And take in all the information that you can, because then, information is power. The more information you have, the more informed the decision you're going to make, and the happier you'll be at the end of the day. So
100%.
And I think importantly too, making sure when you're speaking, not all brokers are equal as well. That's the other thing I'll say. So when you are speaking to a broker, just because they did a good job for your mum and dad 30 years ago, it doesn't mean they're a good broker in today's market. So finding a broker who actually knows what they're talking about is very different to just finding a broker.
Agreed.
Great. Thanks, Tony.
Thank you, Tony.
No worries. My pleasure. Thanks, guys.
That's a wrap for today's episode of Building Your First Home, brought to you by Turnkey Building Group. We hope you found our discussion insightful and feel more confident as you embark on your home building journey.
If you enjoyed this episode, please subscribe to Building Your First Home on your favourite podcast platform. Also, follow us on social media at Turnkey Building Group for the latest updates and home building tips. We love hearing from our listeners, so feel free to share your thoughts, experiences, and any topics you'd like us to cover in future episodes. Thank you for tuning in. Until next time, have a great day and happy building.